everyone, welcome to the first video on this new RBFX YouTube channel. Something I've been looking to do for a long time, but I haven't really had the time to do it. So I thought now it's 2017, it's a good time to start. And really I hope this is going to be very useful and very informative to a lot of people. Even if it's not necessarily something you do, I think you can still learn a lot from it, no matter how experienced you are. Now I'm looking to upload these kind of small, short educational videos in a kind of mini series. So it's sort of mistakes that people make in their trading that they may not realize they're making, reasons why these mistakes are bad and why they are mistakes, and also what you can do to kind of rectify them and make sure that you don't make them again. So hopefully, yeah, it's going to be useful for a lot of people, I hope. And yeah. So to begin with, this video is going to be about moving your stops to break even, and the infamous or famous risk-free trade or free trade. You hear a lot of people say this, and why there's really no such thing as a risk-free trade, and why the concept of it is kind of quite silly in terms of moving your stops to break even for a risk-free trade. So yeah, I'm going to explain a lot of things, and hopefully it's going to be a very informative video. So to begin with, we'll be doing moving your stops to break even. So let's have a look. So moving stops to break even, this is something that, well, I used to do. Pretty much everyone I know that has traded in the past or still trades now has done, even as part of their strategy, which can be used well. You can move your stops to break even in certain scenarios, and it's not a bad thing to do. But what I'm going to look at in this video is when it's a bad thing to do, which I'm sure a lot of people are doing the exact thing that I'm about to show you. And I'm going to explain why this is not what you should be doing and how you can fix it, basically, and when you should be doing it. So the market's trending downwards, it finds an area of support, it bounces back up, a small retracement, it then breaks down below that level. So of course it's breaking down below that swing low, that previous support zone. So now you're knowing that this support zone could act as resistance because it's previously acted as support. So it's an area where price is likely to bounce from or either break back through. So you're looking for trades in the area where this blue dotted line is. So price retraces back into the area. You get some sort of reversal signal. Say you have a candlestick pattern, I don't know, an evening star, a shooting star or something that confirms to you that this pair is being sold at that level. So that previous support level is now acting as resistance, and you can look to enter a short trade. So if you enter short and you put your stop loss, say 20 to 30 pips above the high, depending on what time frame this is on, it could be anything. This applies to any time frame, any pair, any market really. So you enter the trade on confirmation of a short from this level. You place your stop loss however many pips above that zone. You place your take profit at a level that makes sense. It could be anything really, just an area where you want to take your profit. It could be based on Fibonacci, it could be a previous market level, it could be anything. So you enter the trade then moves downwards. There's no real pullback, it just comes straight down from that level. You're thinking brilliant. It breaks down below that next swing low. So of course it's broken down just past that support level. You could be thinking, right, it's on its way down, there's no stopping this trade, it's clearly a winner, or it's on its way to winning anyway. So then you say, right, I'm going to move my stop to break even because I don't want to lose on this trade. I don't want to take the chance that price is going to all of a sudden spike back up and take me out because I'm already up, say, 2% or something. You're already up 2R and you're too scared to lose the money, which is understandable. So you move your stop to break even. And the next thing that happens is price moves back up into that area of support, now resistance, and it stops you out at break even basically. So you haven't lost anything on the trade, but you have been taken out the trade, so you're now not in the trade. And then what happens? It doesn't hit your initial stop because that's safely above. Obviously, if price was to go up into that stop level, the original stop level, then it's broken above that resistance and you can safely say that your trade idea is wrong. But it goes back up for a double top, and then what happens? It falls all the way down to your profit target. Now, anyone that's been trading for a decent amount of time is going to have experienced this. I've definitely experienced this, which is why I know not to do these things. And lots of people I know, lots of traders I know have also experienced this, and some of them still do. Now, your initial trade idea was brilliant. You've taken a great trade, but unfortunately, your management of the trade has taken you out of the market at break even. So you've made nothing from the trade, even though it's hit your target, not your stop. And the reason why this is such a silly thing to do is because if you think about it, if you're short a market and your stop loss gets hit, what's happening? So if you're short and your stop loss gets hit, then you're buying back your position. So if your stop loss is now set at that resistance level, which is where you entered, then you're buying back at resistance. So when price comes back up and it hits your stop when it's at break even, you're effectively buying resistance. Now you would never do that unless you didn't know how to trade in a normal situation. So if price was coming up into a resistance level, you're not going to buy into that level unless it breaks, are you? So why would you move your stop there? Because you're doing exactly the same thing. You're buying back your sell position at that resistance level. So not only is it a silly thing to do just in general, when you think about it in terms of what you're actually doing, buying back that position into resistance, you really kind of realize, it is just a very silly thing to do. And this is why a lot of traders will do this, and they'll find that their trading ideas are correct, but they're not really going anywhere. And this could be one of the reasons why that happens. So now let's look at a chart example of this, a real life example. So this is a 4-hour chart, I believe, of Aussie dollar. If you look to the left hand side, you can see that there's two areas, two kind of wicks, where price found support. And then if you look at the pink area, this pink area to the right hand side, you can see that price then retested this area of previous support as resistance. This is a very kind of common thing to see, previous support being retested as resistance and the other way around. So you're looking for this area to get short. Then there's nothing else on this chart. There's no fibs or trend lines, counter trend lines, support and resistance, major levels. So there could be a multitude of other things here, but keeping it basic for this example, obviously you're looking for that short opportunity in that area. So hopefully someone spotted, you have this shooting star formation, this shooting star candlestick here, and this would be a confirmation for you to get short from this level. So you have these kind of very wicky candles going up into that area. You get this nice shooting star. So say you take an entry on that shooting star on the low of the candle, and you place your stop loss safely above 20 to 30 pips on this 4-hour chart, I imagine. If price was to go up and hit that stop loss, then of course this area is not very strong resistance, and it's fine. You've been stopped out. Your trade is wrong. It's okay. Move on to the next. But in this case, that's your trade idea. So your profit target, for example, on this, you could have had it on the swing low. It's a very good risk reward still, that trade. So you enter, you have your stop loss, your profit target where it is now, and price moves quite nicely downwards. It looks about 60% of the move is already done. So you think to yourself, brilliant, the move is on the way. It's not going to go back up into the area because of course it's been up there, it's moved away. So I don't want to take a chance just in case I get a massive spike on news or something. So I'll move my stop loss to break even, so that if it does, then I'm not going to lose, but I'm halfway there. So it's pretty much a free trade. This is what I'm going to go over later, the free trade problem. So you move your stop loss to break even, and then what happens, you probably guessed, price comes back up into that level to retest as some sort of double top before going down and hitting your profit target. Now you can imagine that if this happened to you, then it'd be extremely frustrating. I imagine it has happened to people before. It's happened to me, it's happened to people I've known. So once price comes back into that level again, you're buying into that level with your stop loss. What I said before, when you're in a sell trade, your stop loss gets hit, you're buying back that position. So what you're doing is you're simply, instead of selling like you did the first time, you're buying into that level. So you never would have done that, would you? But you're doing it here because your stop loss is there. Price didn't reach your initial stop loss, but it did take you out for break even before stopping you out and hitting your profit target. So yeah, very frustrating if this would happen to you. But this is what happens this is what can happen when you move your stop loss to break even without really thinking about why you're doing it, just out of being scared of losing money. It's not good, and that's why. So there it is, spikes you out, doesn't hit your initial stop, finds resistance back at the same level, drops down and hits your profit target. Frustrating indeed. So when should you move your stop then to break even, or move your stop at all? Of course, I'm not advocating you keep your stop in its original place the entire time the trade's open, because that's therefore not managing your trade at all, and that's not really a good thing to do. Some cases it may be, but obviously a lot of the time it's not. So using the same example, where would I say, or where is the place to, or the time where you would move your stop to certain levels? So the same idea, you enter at the same place in the first example, you set your stop to the original place, you set your target where it was, the price comes down, but instead of, this time, moving your stop to break even though there's no retracement and the move has just gone straight down, just because you think that the move is obviously going to work and you don't want to lose money. Now what you're waiting for is a new higher low to be formed. So once that new higher low is formed, and the probability is in the favor of this now carrying on downwards and not going back up into that resistance level, because it's found a new resistance level effectively, then you can either move your stop to break even if you want to, or you can move your stop above that high. So there what you're doing is, even though in the first example of moving your stop loss to break even, you're still doing the same thing as the first example, but you're not waiting. You're not kind of expecting that trade to just fall. You know that there's a new higher low being formed, lower high being formed. So there's the new area of resistance, which price is unlikely to break through. So you can now move it, or you can move your stop above that new resistance. And then, nice, in this example, obviously it's a perfect example, the trade goes down and hits your profit target. And you haven't been stopped out, you've actually taken your profits. And in the second stop loss, you've actually locked in. That's probably about 1.5%, 1.5 R. So yeah, very good. Even if you get stopped out of that second one, it's not a bad trade. You still made profit. So the second kind of example of how this can happen is to do with hammers and pin bars. Well, pin bars / hammers and shooting stars are all the same thing. So say for example you have price moving up into this area. It's clearly found resistance. Price moves back up into the area again. So what are you going to look for? Either a break or confirmation to go short. And say for example you get a shooting star. So you think, right, I'm going to go short on a shooting star, and price, you set your stop loss above the shooting star, of course, safely, I don't know, 20, 30 pips above. Price then moves down, so you think, right, obviously it's rejected this level, it's on the way to my profit target, so I can move my stop to break even just in case I lose, because I don't want to lose money. And what happens, price comes back up to retest the low of that shooting star before plummeting down to your take profit level. And this isn't a rare thing, this is a very common occurrence, and you can look back at charts yourself and see this. That hammers get retested, the highs of hammers get retested, and the lows of shooting stars often get retested. And it's not always in a kind of a rounded retest, it can also be simply this. So you have your shooting star, then you have a bearish candle, maybe that's a 4 hour, you think, right, great, price is obviously on its way down, I can move my stop to break even. Then the next candle comes back up, retests before it falls. And again, extremely frustrating because your trade idea is correct, and if you kept your original stop, then you would be okay. But because you've moved your stop to break even out of fear of losing, or whatever the reason is you're doing it, then you have been stopped out, and price then goes down to hit your take profit. So yeah, that's why you should not do this in any scenario, unless of course you see this new higher high or lower high being formed. So there's a price action reason or a market structure reason to move your stop loss, not just because you're too scared to lose. Because if you're too scared to lose and you do this, then you know what, you're going to lose basically. So your fear is going to come true because you're not trading properly. So an example of this on the charts again, you have this very strong level of resistance. If I showed you this chart properly in terms of previous action and price action after this, you can see that this is a strong level. But just for this example, I've taken a screenshot. So you have this area of resistance up there, that top black line. Going to the left, you can see it's an area where price has reacted and dropped before. So price comes back up into that level, so you're looking for a break or you're looking for a bounce. And you notice this kind of shooting star-esque kind of candle. It's halfway between a shooting star and a kind of a doji, but it's more shooting star-like. So its price has gone above, it's wicked, it's come back down below, it's clearly rejected. So you think, right, I'll go short at that level. So you short that candle, and your stop loss goes above that resistance area. Maybe your take profit is mid-range because you can see you've got support, resistance in that area. And price consolidates for a short while before dropping pretty heavily, you can see there. So you think, right, that's cool, price has moved away from that area. It's not going back, it's going down towards my profit target, but I don't want to lose just in case. So brilliant, free trade. Let me move my stop to break even. I can't lose, price is on the way to my profit. And then what happens, price comes back up and it retests that low of that shooting star and other consolidation support before going down and hitting your profit target. So again, you're going to be kicking yourself because your trade idea was correct, but because you've moved your stop to break even, you've taken yourself out of the trade. So again, you're buying back your position where you entered, which is nonsensical basically, and it's going to really harm your trading performance over the long term and the short term. Okay, another example from a buy scenario, a hammer scenario. So this here has properties of a hammer. So you have this very long wick spiking down below the support area of the previous low, also testing that lower channel boundary, and you get a nice obvious amount of buying coming back up into that level. So if you wanted to go long on this kind of hammer type candle, maybe it's a very long wick, so maybe your stop goes below that support level, not all the way down past channel support, and you enter on the close of that the highlighted hammer candle, and then price moves up. You see you've got quite a nice bullish candle there. So price action has moved back up above that level, and it's carrying on its way to your profit target, which is, for example, say the high there, a sensible place to take a profit. So you then move your stop to break even because, of course, you don't want to lose, and price is already on its way up. So it's a free trade. Price is moving towards your take profit level. So you think, great, I can just leave that run, and I'm in the clear. But then what happens? Well, price comes back down. It retests that area as support before continuing up to your profit target. So same as before. It's something that you can find a lot. Obviously, it doesn't happen every time like this, but it does happen a lot, and it's gonna be something that probably 70 to 80% of the people watching this have encountered, especially if you've been trading for a long time. And if you haven't been trading for long and you do this, then I can promise you that you're going to experience this soon. And hopefully this is going to help you make you not do this, give you a good reason to stop making this mistake. So the fun part, the risk-free trade, and this really is amazing. When I see people posting this on Instagram, on Twitter, on Facebook, whatever. So they're in a trade and their price goes, in their favor by however many pips. It could be 10 pips, it could be 50 pips, and they think, right, if I move my stop loss to break even now, then I can't lose. So great, I'm risk-free. There's no worries, and what a great trade. Look at me. But the problem is it really isn't great, and this is why. If you're moving your stop loss to a level that's in profit, so say you have if you're going long and you have a new higher low formed, so a new area of support which you can then move your stop below, and it's in profit, then yes, that is risk-free and you've locked in profits, that is good. But if you're moving your stop loss to break even as soon as your trade goes into profit, just because then you can't lose, then it really is a ridiculous thing to do, and this is why. So imagine price comes down into a level, it then retraces back up, moves back down into the level, forms a double bottom, moves back up, can't break above that high, moves back down again. You're now in a range effectively. So you are now in this range, and you see a nice bounce, a nice triple bottom bounce from this lower support level. So you think that you're going to get long, which obviously makes a lot of sense. So you get long, you put your stop loss below the area of support. So if price does break below and hit that stop loss, then your trade idea was wrong, and that's fair enough. And you put your profit target at the top of the range, pretty standard type of trade there. Price then moves upwards, and you are kind of, 60-70% of your move is done. So you think, great, I'm up. I'm 70, for example, imagine this range is 100 pips, and you're 70 pips up, and you have 30 pips to go until you hit your profit target. So you come back to your charts, you see this, and you think, right, brilliant. I'm going to move my stop to break even because now I can't lose, and I'm so close to hitting my target. So this is a great trade, which is fair enough. The trade itself is good, but your management is not good because you're 70 pips up, you're 30 pips to your target, and you've just moved your stop loss to break even. So effectively, what you're doing is you're risking those 70 pips that you've just made for 30 pips. So instead of your original risk reward, which was, for example, on this trade, it could have been something like 1 to 5 or something crazy. So now you've moved your stop loss to break even. Your risk reward is now risking 70 to make 30. So it's now a negative risk reward. So if price moves back down into your stop loss, which is now at break even, just because you wanted to make those 30 ticks and you're break even, so it's fine, then you have lost all of your profit for the sake of trying to make 30 pips. Now, of course, you should hold your trades until they hit your target, unless there's a price action confirmation. You should come out. But again, this is just straight lines up and down. There will be higher lows and higher highs being made on this up move. So you could be moving your stop loss into profit and trailing it each time. That's a good thing to do. But moving it to break even, for a free trade because you then can't lose, it really doesn't make any sense, and it's quite annoying to see. I can understand why people do it, but when you understand how stupid it is, it's quite annoying to watch people do it. And hopefully this is going to stop that for some people. So it's not a free trade because you are risking 70 pips to make 30. Now, a very good example, quite a hilarious example from another trader called Tom Dante, who is a very good guy. You should look him up and watch some of his videos. Basically, the example he gave, which I think is brilliant, and it really sets this one in your mind as to why you shouldn't do it. If you can imagine you're in a room with a trader, and this trader's done this sort of thing, so they've entered on this range, they've bought up, and they're plus 70, and they've got 30 to go. So they turn around and they say to you, I'm in this trade, my stop's at break even, I can't lose, I'm 70 pips up, got 30 to go, it's a brilliant trade. So you kind of say, okay, so you lean over their shoulder, and you open up their MT4, and you close them out of the trade. So you've closed them out of the trade for where they are right now. So they're up here, and their stop is down here, and their target's up here. So you close them out of the trade, and they're like, oh, what are you doing? So you say, oh, I'm sorry, it's fine, just get back in with your original stop and target. So you get back in, well, you put them back in with their stop and their target. So they're up here, and they're risking that 70 to make 30. And they're going to look at you like you're insane, like you don't know what you're doing. But all that is exactly the same as what they're doing, but they're looking at it from a different perspective. So if you got that guy if you said to the guy, get back into the trade with your stop and your target where it was, then they're going to think you can't trade. They think you're an idiot. But it's what they're doing. It's the same thing. If your stop is moved to your break even and you're up on the trade, and you're not making use of kind of swing points to move your stop below to lock in profit, it just doesn't make any sense because you're at a negative risk reward. So yeah, it's a good example to cement that idea in, and I hope that everyone watching this video doesn't do it anyway. But if you do, that now you stop doing it because of that. The same thing with moving your stops to break even, just because you're too afraid to lose or whatever else. So yeah, that's pretty much this video concluded. It's only a couple of small things, but I know that they're small things that affect a lot of people. So I'm hoping that with the examples that I've provided, people stop making these mistakes, or realize and work on the mistakes they're making. And this is the kind of thing I'm looking to do now, kind of short videos, informational videos on these sorts of mistakes, just to help people out really, and yeah, put some good educational material out there. So if you liked it, obviously like the video, give me a subscribe, because there's lots more things to come lots more things to come, and you can enjoy more content when it arrives, and look forward to seeing you in the next video. So yeah, thank you very much. Hope you learned some stuff, and please stop doing this because it's stupid. Goodbye.